Welcome. In this video, can ZBCN coin increase by 200%? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When taking a general look at the chart, it becomes clear that past price movements have formed a striking and meaningful pattern. Especially when analyzed retrospectively, it is evident that the market first made a strong and decisive upward move, followed by a natural consolidation phase after this major rally. This initial surge occurred with significant momentum, strong volume, and dynamic action, providing investors with serious confidence about the market's direction and potential. The sharp price increase at that time was not only limited to short-term buying opportunities, but also sparked expectations of new highs the asset might reach in the future. Following this powerful move, the market entered a pause phase that can be considered very natural and technically healthy. This period typically forms what is known as a consolidation or sideways correction. During this time, the price moves within a certain range, allowing the previous rally to be digested and the supply-demand balance in the market to be re-established. Such corrective movements are important technical processes that pave the way for continued upward trends and lay the groundwork for the next breakout. Although sideways movement may appear stagnant on the surface, these periods are actually critical phases where large players reposition themselves, buyers and sellers reach a balance, and the price attempts to find its internal equilibrium. This phase can often test investors' patience. However, experienced investors know well that major price movements often follow such sideways trends. Therefore, the current phase of sideways and slightly downward price movement should not be viewed as a negative situation. Rather, this calmness should be seen as a precursor to a major upcoming move. At the current point, it is clearly seen that the price is once again in a sideways correction structure. Just like after the previous strong rally, this current period could also be a preparatory phase ahead of a new bullish wave. Based on the principle and technical analysis that history repeats itself, it is quite likely that similar scenarios from the past may occur again. Considering how the price gained momentum after the correction that followed the earlier rally, this similar sideways structure may lead to the same outcome, a new upward wave, in other words, a rally. During this correction period, many investors may act impatiently and exit their positions. However, patient and strategic investors will be the ones who can read where the market is headed during such consolidation phases and see the bigger picture. These sideways moves are often considered the silence of the big players, the calm before the storm. As price tightens in this area and volume remains low, most investors lose interest. But it's exactly during these moments of disinterest that the market can suddenly shift upward and surprise everyone. It should be remembered that every rally requires some degree of correction. Healthy market movements are characterized by ups and downs. A continuously rising structure is not sustainable in the long run. However, the rally correction new rally cycle is one of the most preferred, solid, and reliable scenarios in technical analysis. What we are experiencing now closely resembles this. After a strong prior rally, we are now going through a sideways, slightly downward consolidation phase that may be bringing us to the edge of a new rally. Additionally, during such correction phases, when many investors are out of the market, a sudden upward breakout often triggers a missed opportunity psychology. This, in turn, brings in new buying, changes market dynamics, and strengthens the upward movement. So, rallies that follow sideways structures are not only technically significant, but also psychologically more impactful. But we can't base our analysis on this alone. Let's now look at other metrics. Stay tuned. When the recent price movements on the chart are examined in detail, a striking and positive picture emerges. Especially when compared to the overall market trend, the resilience and determination shown by this asset is extremely significant. While a leading and trend-setting asset like Bitcoin is experiencing a decline, this asset's resistance to the downturn reflects a strong structure that is rarely seen in the market. Under normal circumstances, any downward movement in Bitcoin directly affects altcoins as well. However, in the current scenario, this asset's resistance to the decline and even its sideways or upward behavior signals a major transformation that attentive observers can easily recognize. This behavior is essentially the market's way of saying, "I can't go down anymore." In other words, no matter how challenging the market conditions may be, the price has now settled at a certain base level and is strongly maintaining it. Particularly when Bitcoin is dropping and this asset remains stable or attempts to rise, it reveals the presence of a strong internal buying pressure. These types of structures are often silent yet powerful technical signals that occur before a major breakout. It's as if the price has become immune to downward pressure. No matter how much selling pressure arises, buyers' confidence and demand are enough to keep the price at this level. In technical analysis, such situations are referred to as hidden accumulation. While the price may appear stagnant on the surface, significant strength is building behind the scenes. During these periods, volume may remain low and the market may seem quiet. However, in the background, large players are increasing their positions, patient buyers are holding their ground, and the downward pressure in the market is gradually decreasing. This accumulation phase often results in sharp and sudden upward moves, because a price that cannot fall will eventually rise. There are countless examples in technical analysis that support this pattern. Another noteworthy point is that the price is starting to decouple slightly from its correlation with Bitcoin. This is a highly valuable signal for technical analysts and institutional investors. In general, the crypto market moves in accordance with Bitcoin's direction. However, at certain times, some projects or assets break this correlation with their own technical or fundamental signals. This indicates to investors that there is separate potential in that asset. What we are witnessing now can be interpreted in exactly this way. While Bitcoin is falling, the fact that this asset is holding steady or gaining strength clearly reflects hidden interest and growing confidence in the market. Especially during periods when bottom formations are taking shape, a sideways price action that avoids declining may signal an upcoming breakout to the upside. It may indicate that the influence of sellers has diminished significantly and that buyers are gradually taking control. This represents a transitional period, which is often referred to in technical analysis as a decision point. Simply holding steady at such a critical juncture is in itself a positive sign. It means declines are being rejected, every attempt at selling is being met with buying, and the price is beginning to form a base within a defined range. In light of all these positive developments, the likelihood of an upward breakout is growing stronger each day. A breakout accompanied by rising volume could push the price to much higher levels. These types of breakouts are usually fast and intense, as the built-up pressure in a tight range often leads to an explosive move once released. This can quickly drive the price to key levels. Furthermore, such a surge will have not only technical implications, but also a significant positive effect on investor psychology. The general behavior of investors supports this process as well. An asset that does not decline for an extended period attracts attention. Especially an altcoin that remains strong while the leading coin is dropping becomes a focus point. This draws new investor interest and brings fresh capital into the market. Recent analysis of the chart reveals that the Bollinger Bands, one of the technical indicators, are highly sensitive to price movements. In particular, the moments when these bands begin to narrow are among the most carefully monitored periods in technical analysis, because the narrowing of the Bollinger Bands indicates that the market is experiencing periods of low volatility and the price is stuck. However, this period of calm is never permanent. On the contrary, it is often a harbinger of high volatility, a strong price explosion. The logic of Bollinger Bands is that when the market moves within a narrow band for a long period of time, energy builds up. This energy is usually released in a sudden and violent move. The direction of this move can be up or down. However, current technical and fundamental conditions indicate that the price is preparing for an upside breakout. In particular, the price moving away from the lower band and heading towards the middle band is an important signal that signals the start of an upward momentum. This momentum may get stronger with the opening of the bands. Bollinger Bands show you the squeezes. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.